Ladies and gentlemen, our last guest for today is a very, very fascinating discussion and one I've been waiting for. I'm very excited to do over at least for several months now. Please welcome Dr. Najam Kidwai, or I just Naj. Can I just call you Dr. Naj?
You can just call me Naj Alvin. That's great. Thank you.
And his co-founder of Crypto One SPAC, Mr. Michael Zhao. Welcome, Michael.
And there's a lot of old friends here on the chat and also quite a lot of new friends. So
Yeah.
glad to be connected here.
Guys, I do need to ask you, and just for our guests, Crypto One is the first SPAC listed on NASDAQ with roughly 1.5 billion in mandate to acquire and hunt for the next crypto champion. And congratulations on that, guys. It's been a very, very big success. I'm particularly proud of both of you. And Michael, and just for the audience to know, we come way back. Michael started one of his first hedge funds with OPIM on our hedge fund platform before he took the more intelligent route to pursue his career in crypto. Well done with that. And congratulations, team. Let's talk about Luna. What's your take on it? And what's the impact on the market? Now, before you begin, I have a funny feeling that this is the best situation for a team like yours looking to hunt for protocols, because you need this kind of a shakeup to put fear in some of the players and some of the potential investees that you're looking for. Naj, Michael, whoever you'd like to start, go ahead.
Michael, why don't you take this one?
The Luna incident is definitely very refreshing, just to put it that way. I think I was actually talking about that the other day with my friend. Once a year or twice a year, you get it, right? Just to make sure when you're actually not part of it. So I mean, definitely, even for today, right now, you can tell the market is trading very heavy. I think it might have another like lower, but I think overall for the long run, it's actually a healthy thing. It's like a reality check. Because I guess for the past 2 years, I started from the DeFi momentum, retail guys, institution guys come over to the market, but actually primarily for the return, the so-called 100x. And then in pursuit of the return, somehow I get lost. You don't really look at the risk control. And for the crypto market growing to an alternative asset class, we actually need to have that in place. So I think it's a hard way, but it's the right way.
Nash, what do you think?
I just echo what Michael said, right? I think all the panelists had a very good perspective. Regulation is needed, right? So our view is obviously, having done a SPAC, we believe, very early that the crypto industry needs better risk, better compliance, better regulations. And not to say that we saw this coming with the intensity that it has happened, but I think this shakeout is good, and it sort of, it's needed. By the end of the day, there's always going to be bumps on the journey. Obviously, I feel bad for people who have lost money, and there's many people in that category. But hopefully when things calm down a little bit over the next few weeks, few months, we should be in a much better position to build upon. And hopefully the market will come back fast.
So what message would you like? I mean, and let's be clear, the modus operandi, the mandate that Crypto One has right now is to look out as to basically acquire a crypto company. Could be an exchange, an asset management firm. It could be a financial institution. What kind of dialogue are you going to be having with them today that was different, that might have been different 2 weeks ago?
Listen, I think firstly, great question, right? I think maybe if you were valued at 2 billion 2 weeks ago, you probably won't have the same valuation. So from our perspective, I think the ability is definitely a buyer's market. So as we've been talking to potential targets around the world, we've seen marked differences in valuations. So at least from a public market comparable. So if you look at a number of exchanges that were, let's say, valued at 1.5 billion, those valuations today are probably half that. If you look at Coinbase that went public in April last year at $100 billion valuation, as of this morning, they were trading at 11.9 billion. So sort of 80 to 90% off their public debut. So the reality is, I think having a SPAC vehicle, having capital in trust, having a story that says to a company, in uncertain times, here is a dedicated pool of capital with a valuation. One of the biggest challenges we've seen is that there's been a lot of FOMO investing in the crypto industry. So you've had a lot of companies that have had very healthy private company valuations, sometimes 40, 50 times revenues. The reality is, in the public markets, that will not fly.
Yeah.
The one thing that we have learned though, is there's been some negativity around SPACs because a number of these vehicles haven't necessarily traded well. And the reason for that is a lot of companies that have gone public should never have gone public in the first place. You need a certain size, you need a certain scale, you need a very clear, a good management team, a good management of your money and burn, an addressable market, a thesis that actually you can have credibility on executing upon. So between Michael and myself, we've been involved in a number of SPACs, and we've even seen companies like Forge Global, which went public in March. It's a marketplace for pre-IPO equity, and it's still trading at sort of $4.5 billion in a very, very volatile market. So what that shows is that if you have a great company with a great management team, a great thesis, executing well, even in turbulent times, you can actually have a very successful business and generate a very meaningful return for your stakeholders. So net, I think it's great for us in the sense that there's some realism coming back into the market. There's been some realignment on valuations. So I think if something was going to cost me $1.5 billion, let's say 2 weeks ago, I think we should be in a pretty good discussion right now to have a conversation on a 50-60% reduction on that. Michael, anything to add?
I think coming back to the target part, during the bull market, people thinking about momentum. So during the so-called bear market, I think all the projects should actually take a pause, really think about where is the value creation. The momentum only kind of help as the bonus, but when it comes down to why people buy this, why people support this, there's actually a value creation. It doesn't matter if you are exchange, you are a custodian service business, you are a trading house, you're a crypto asset management. If you can't justify there's actually a value creation, then there shouldn't be demand. And if there's no demand, then it's not going to be long lasting. So I think maybe instead of worry about, hey, what's the market going to be, right? I think we operate crypto company as well. This is actually the number one priority we have been thinking for the past few years. Where is the value creation? Do we offer a product or service? There's actually a market. When we say the market, doesn't mean that but there's a FOMO, people are all making money. When there's actually a demand during bear market. So always think about worst case scenario. And if you can actually manage to survive the worst case scenario.
Okay. Well, Michael, we're in a bear market now. Right? When the tide pulls out, you can see who's actually wearing any underwear. So we're in this place right now. Surely you must have prepared and there's so many different targets, right? You can look at exchanges, custodial, and then you can look at one-stop shop. What's exciting you right now? Are you still looking at exchanges? Number one. And number two, are they regional champions? Because all the US champions are kind of built up right now. And yeah, let me start with that and we'll go from there.
Okay. I think what we care is that fundamentally crypto industry is like a traffic business. The way how crypto market operates is exactly like how people trade euro dollar 20 years ago. And we're going to see a lot of consolidation, especially as all those institutional investors come over to the new market. So we will be very interested for any companies that can actually acquire traffic, right? To take out more market share. And then they will try to find ways to retain those customers, right? To become a sticky customer. Because right now, all those traffic, whenever the people who trade cryptos, right? At least they have 4 platforms and then they kind of jump around whenever they have promotions. So that's something that we don't call it sticky traffic, right? So I think the next stage is that either you have some killing service or you have your own ecosystem that retain that traffic within your platform. And that is the relatively easy way.
When I look at a situation like Luna, for example, which inherently is one of the stickiest ecosystems in terms of how complex it is, it literally has gone to 0 now. Is there such a thing as sticky? But yeah, Naj, if there's some point that you wanted to highlight on top of Michael and maybe take a point here, that would be great.
Look, I think if you're public, what that shows is that you are well regulated. You have trust with the consumer. You're not going to run off with their money. So I think the crypto industry, if you're a private company that nobody's heard of, it becomes very, very challenging to become a regional champion. You may be lucky in 1, 2, or 3 in your market, but let's say if you're in Japan, right? And you want to go outside of Japan and then you think, hey, Malaysia, Vietnam, Philippines, Thailand. So how can you sort of build that trust with the consumer in those international markets? One way of doing that is being regulated and actually listed. The NASDAQ, NYSE brands are global brands that are well respected. It's a meaningful jurisdiction. It's the deepest capital market from a liquidity standpoint in the
But does
world.
that also ring fence you in that jurisdiction as well? Because you're only regulated in that space.
I think the question here is that there's nothing stopping a company. Let's say you're in Latin America, and let's take an example of an exchange, and you say, hey, I want to go after Spanish speaking populations around the world. So I want to go after Goa. I want to go after Spain. I want to go after Portugal. The question is that if I'm sitting in Buenos Aires, I don't know you, right? From Adam, right? But if I can sort of log on and sort of say, oh, okay, so you're listed on NASDAQ, right? You're audited, you have all of this stuff. It does give the consumer a lot more confidence. And as Michael said, today people are relatively promiscuous, right? You will go for zero trading fees or the lowest fees. But I think if you can have an understanding of great product, a great customer experience, great customer support, all of these things that are taken as given in traditional, let's say, internet companies that have been around 20, 30 years. So when you think of like the Amazon of the world that is obsessed around customer behavior, customer experience, how does that translate into the crypto world? So even when you take companies, I don't want to sort of name and shame exchanges, but the reality is customer support on the vast majority of those platforms is very, very painful.
Right? They don't exist.
Yeah. And they don't exist. So I think another thing is that if you're a public company, you have to behave better, right? It helps you as a business raise your standards. And I think one of the reasons that Michael and I actually did Crypto 1 and hopefully 2, 3, and 4 is really to bring a better product to the market, better customer experience, better customer support. And that's been our thesis over many years.
So back to an earlier point about valuation, right? A lot of the private market is super hot right now. Exchanges and private companies are able to raise capital directly from allocators and investors. This poses a very significant challenge for you. So if I'm an allocator and I'm deciding whether to invest through or make a case of going VC direct or potentially going through your SPAC, it seems to me that there's a value add of regulation that the SPAC could, or being listed, brings to the incumbent. And is that message filtering through, or are the firms saying, I don't want to be regulated because regulation is stifling my innovation? And what does that dialogue sound like?
Alvin, that's a great question, right? And I think from our point of view, not all SPACs are created equal, right? So the reality is you have a lot of SPACs where people went to the right business school, they understand financial engineering, but they're not operators, right? They don't understand how actually an entrepreneur thinks. At least with our SPAC, Michael, myself, and the team, we've all been operators, right? We've been entrepreneurs. We've built scaled businesses in the private markets and the public markets. So when we go and speak to founders, the value add is not just a pool of capital. It is the one thing that we've learned in this industry and on this journey is that you have a lot of entrepreneurs, one, that are first-time entrepreneurs, right? So they don't necessarily understand the value add of a public market vehicle. So you may have been a software developer, you may have been an engineer, you may have been a management consultant, an investment banker. You don't expect them necessarily to have an understanding of how to play capital markets, right? And why would you? So for them to actually understand the benefits of being public is an education piece, right? So what we find is that when we're speaking to entrepreneurs, particularly if they've had capital markets experience or they've had a prior exit in the public markets, we get a much better hearing because they understand that this is not about making a quick buck, right? Ultimately, when you go public, you want to be able to 10x, 20x in the public markets over a period of time. But what we're seeing is that there is so much money available in the private markets from a dry powder perspective, because FOMO was driving a lot of investments in some of these companies. I mean, you're seeing companies raising A rounds, right? 80 million, 100 million, $500 million valuation. It is seriously out of whack, right? And I'm a big fan of gravity, right? So what goes up eventually must come down, right? So the reality is when you've been investing for 20, 30 years, you see cycles. One of the things is that we take a long-term view. The other value add is that when you're a private company, you get an investment, a VC is sitting on 10 of the boards, right? So it's goldfish syndrome, right? You do a board meeting, they move on, they go on to the next one, then they're going to find the next deal. So we feel that the value add on helping those companies scale is maybe not as strong as you would get from somebody like Crypto 1. We also understand emerging markets, right? We've invested all over the world. Again, a lot of VCs tend to be quite regional. So if you're based in Silicon Valley, you probably want to do US, maybe Latin America, right? But Europe, Asia in particular becomes a little bit of a challenge. unless you have sort of regional vehicles. But I think the key thing.
So let me hold you there. Asia, and I know you guys are doing a lot of work in Latin America. Asia, let's forget about PRC right now. It's not really a destination, but you have a lot of other countries. Indonesia, 300 million people. ASEAN, Singapore is still a hotbed. Australia, Korea. Where is interesting for you right now? And can those regional players expand globally the way that you hope them to be, given the number one, leading regulation coming out of the US, and number two, just bigger global players there?
Look, we're very excited with opportunities in emerging markets. And by emerging, I really mean anything out of the United States, right?
Yeah.
And as you said, PRC situation is driven more geopolitically, but we see huge opportunities in countries like Japan, right? Where sort of crypto adoption is only 5%. Entering that market has been a challenge for particularly for US investors. But I think if you can figure out a market entry strategy, you'll have seen that actually there was a recent SPAC merger announced for an exchange in Japan called CoinCheck at a $1.25 billion valuation. And we believe that there are other opportunities in Japan that could even be stronger than that. We've seen FTX acquire Liquid in that market. So Japan is a jurisdiction. You look at countries like Indonesia, a 200 million plus population, young, crypto savvy, mobile led. And you've even seen companies like GoCheck, right, that have gone out at a several $billion valuation domestically. Then there are jurisdictions like Singapore. We're seeing a lot actually happening in the Middle East. So where Michael and I live in Dubai these days, you're seeing virtual assets laws, 1,000 crypto companies that have been incorporated in Dubai in the last several months alone, right? And then you've got jurisdictions in Europe, right? The UK is finally getting its sort of crypto act together, and there'll be regulation out by year end. Huge opportunities in Latin America, right? So you're seeing even companies like Coinbase that were trying to acquire Mercado, where unfortunately that deal fell apart earlier this week, which was probably due to price, if I was speculating, right? Based on the Coinbase share price actually declining rapidly. So the world is a very, very big place. I think the key thing is that you ultimately want to have entrepreneurs that do want to go regional, right? And we have seen many examples of companies, even out of the US. If you look at Kraken, if you look at Coinbase, and FTX, these countries, and Binance, of course, these companies have gone global. Crypto.com, we've seen all of the numbers around branding, Formula One, stadium naming rights, right? So crypto in many ways has become the new tobacco, right? For at least sort of brand growth around the world. But the view is that there is a lot of opportunity outside of the United States. There's a lot of opportunities in China as well. It's just unfortunate that geopolitically, that situation is a little bit stressed these days. Hopefully that will get better over the next few years. Michael, anything to add?
Yeah, just to add on what Naj mentioned earlier, when it comes to Asian emerging market, we feel like Singapore and Japan are those two locations that are most public market ready. And because Singapore has a pretty solid regulation when it comes to digital asset, and Japan is among the few markets that actually opens up to full regulations. In fact, right, a lot of those top tier exchanges start from 2012, right, and never stopped, right, for the past almost 10 years, kind of grow in a unique way, but in a very organized, risk controlled, regulated way. And given that crypto markets operate in a borderless way, so the entry barrier over to new market is actually relatively easier, right? So you start from one areas that is public market ready, and people have this institutional mindset. They have the control risk concern. And then it's very easy for them to actually expand over other jurisdictions.
Michael, we previously had a really interesting conversation about how, and Nash touched on it earlier, which is when you look at the pedigree and you look at the founders and the managers of these new crypto firms, a lot of them are Web 2.0 Google engineers who have moved into the space trying to work in the capital or in the financial space, which is very much touching on what Wall Street is threatening and encroaching on Wall Street in a way could theoretically be a great narrative for why they were attacked in the first place. But when you look at the backgrounds of them and how there seems to be a gap in understanding, a lot of them are hiring into their organizations, traditional financing. We're seeing a great brain drain right now from Wall Street into the crypto space. When you look at that, think back on these conversations they're having with these target companies, are they friendly to this type of, do they want to be regulated? And number two is, what's the value proposition for them to incite institutional investors, which is something that in my last panel with Matrix Port Wu are clearly at the forefront right now and trying to replicate the model that we have in the prime brokerage business into the crypto space?
Well, most of the targets we're actually talking to, they want to be regulated. And then because they understand being regulated is actually the upper leg where they can compete to other competitors. And also in crypto world, for people to know you before you have to explain who you are is so powerful, right? You don't need to lead the market by 5 years, like go to the Mars, right? As long as you're good for actually 1 month, you're already good. So people actually see the value of being a public company on NASDAQ, and then you're actually standing next to Coinbase. So people understand that value. It's just that oftentimes for those targets, for the accounting issues, for one way or another, because for the past 2-3 years, the market has grown just too fast. And also the company has grown too fast. So there's a lot of checks we need to make sure it's properly done for that, well, we can proceed. And also right now, every single company, when we ask them, what do you need, right? They're actually not saying they need funding. Actually, they need talents because they need the talents to actually to implement the things they want to execute. And then I think it's going to be more pronounced, right? Every single firms are trying to hire talents, right? That actually know subject matter expertise where they can come over here to deploy the strategy.
I think just to build on Michael's point, Alvin, having seen a number of cycles where in sort of the late 90s with the dot-com boom, you had everybody from investment banking and management consulting going to companies like Yahoo and Google and stuff like that. And what we see today is that there is another big opportunity for a lot of these people. One, because there's a gig-based economy. So just mindset has changed, right? People are very comfortable working remotely as well due to COVID. But ultimately, what I think we found, and one of the reasons our SPAC was nearly 6 times oversubscribed, was that Wall Street also want people that understand Wall Street, right? That understand institutional thinking as well as crypto thinking. And I think if you can bridge that divide, you're viewed as a safe pair of hands. So obviously between our respective backgrounds, our board and advisors, we have a lot of institutional experience, as well as being involved in crypto for the last several years. And I think those founders, because they're growing so fast, one of the things that Michael and I also see is that the middle layer of management in a lot of these crypto companies is actually quite poor. They can't hire fast enough. So one of the things is when you're running at 1,000,000 miles an hour, and one of the things that we've learned to build great companies, you also need great culture, right? You need to embed that culture. People need to understand what you stand for and sort of execute on that. So we've actually seen that a number of the really big brands actually have pretty, I would say, average at best sort of middle management teams. You have really exceptional people at the top. You then have sort of a relatively modest layer in the middle, and then they're just trying to sort of hire as fast as they can. So what they end up getting is bloated, right? And so one of the things that we feel is that there are certain companies, look at FTX as a prime example of a company that's valued in the tens of billions, but a very, very small team, right? In the sort of low hundreds, right? Compared to some of the bigger companies that have several thousand employees, right? And a much more modest valuation. So it's about working smarter, right? Not necessarily harder. And it's about having great people that are empowered. So I think one of the things is if you can get that sort of mindset and that sort of energy and a public vehicle and combine all of those things, you really have a winning company. And again, I'll use the example of Forge, right? That in the last 2 months as a public company, they have all of those ingredients, right? Yep. The right market, the right story, the right management team, the right understanding of institutional capital as well as retail. And that's why when SPACs work, it's a beautiful model. And unfortunately, we're in an industry where people will always focus on the negative. So they don't talk about the good things. It's always about like SPACs were overvalued, they're trading below offering price. Well, there's a very good question. Why are they trading below offering price? Because you probably did a deal that shouldn't have been done in the first place. Maybe some of the sponsors were compromised on some of the metrics that they should have been a little bit stricter on. And Michael and I will never do a bad deal. We'll always look at companies that have the potential to 10x, 20x in the public market. But having that understanding around talent, brand, customer experience, international expansion, I think bodes well for us.
Yeah, absolutely. I think that's a great way to wrap it up, guys. You still got some time, and it's a very, very exciting summer for you. What's the word? I wish I could be a fly on the wall in your meetings coming up, because surely it's going to be, it would make for a great Netflix.
There's actually a movie I was talking to my friends yesterday. It's called Barbarians at the Gate. It's a very classic movie, right? Watch that movie in case you haven't watched that. It's actually, you will feel different.
Yeah, definitely. Yeah. Barbarians again was a standard reading for us in B school. Thank you so much, guys. Let me know if there's anything that we can do to help. And hopefully when we have this conversation again in a few months, you'll have some good news for us. But in the meantime, I wish you good luck and good hunting.
Thank you. To the moon, as Michael would say. And thanks for your time today. Appreciate you allowing us to share our story, and hopefully speak to you in a few months.
Okay, great. Goodbye.
Thanks. Bye-bye.
Ladies and gentlemen, that wraps up our session. Insto Fomo, spring sessions. Thank you so much for joining. This has been an amazing morning, evening for some of you. It's definitely bloody out there, but it's very, very exciting. And the opportunities ahead for us in the institutional space, quite frankly, are more thrilling than ever. So reach out to any of us, any of our guests. You can reach out to me. In the meantime, I'm signing off. This is Alvin Pham, CEO of OPIM. Thank you so much, and we'll see you next time.